Hi, we are in the second complete comprehensive example for preparation of deceased partner's capital account. So let's go to the second example sum. Example sum. R, S and T were partners sharing profits and losses in the ratio of 5:3:2. On 31st March 2018, the balance sheet stood as. To the left of the screen, we have the balance sheet given, and on the right, additional information. T died on 1st August 2018. It was agreed that point A, goodwill be valued at 2.5 years purchase of the average of last 4 years profits, which were 2014-15, it's rupees 65,000. For 2015-16, it's rupees 60,000. For 2016-17, it's rupees 80,000. And for 2017-18, it's rupees 75,000. Point B, machinery be valued at rupees 1,40,000, patents be valued at rupees 40,000, leasehold be valued at rupees 1,25,000 on 1st August 2018. Point C, for the purpose of calculating T's share in the profits of 2018-19, the profits in 2018-19 should be taken to have accrued on the same scale as in 2017-18. Final point, a sum of rupees 21,000 to be paid immediately to the executors of T, and the balance to be paid in 4 equal half-yearly installments together with interest at 10% per annum. We are asked to prepare T's capital account to be rendered to his executors and also T's executors account. So let's go ahead with the solution. We will begin with preparing T's capital account, followed by T's executors account. The working notes will be done at the end of the sum. The amount, the balancing figure of T's capital account will be transferred to the executor's account. And in the executor's account, we will pay 21,000 rupees immediately and transfer the balance to the executor's loan account. So let's begin with the solution. Solution. T's capital account. Left side debit side, right side credit side. Particulars, rupees, particulars, rupees. We'll begin by bringing down the balance of T's capital. By balance brought down, 75,000 rupees. There's a workman compensation reserve against which there is no claim. So we'll distribute that by workman compensation reserve account. The amount of the reserve, 30,000 rupees. We need to multiply this by T share in profits, which is 2 divided by 10. Comes up to rupees 6,000. There's a existing goodwill which needs to be written off to goodwill account. 25,000 multiplied by T share in profits, which is 2 by 10, 5,000 rupees. Let's deal with the additional information. Point A is about the goodwill treatment. So we'll go to the working notes and deal with the point A. Working note 1. Calculation of T's goodwill. Point A says goodwill is to be valued at 2.5 years purchase of average of last 4 years profits, and the 4 years profits are given. So we'll first get the average profits of last 4 years. You need to add 65,000 plus 60,000 plus 80,000 plus 75,000 and divide this by 4. The total profits is 2,80,000 rupees divided by 4, and we get the average profits as rupees 70,000. Firm's goodwill is 2.5 years purchase of average profit 70,000, which is equal to rupees 1,75,000. T's share of goodwill is equal to the firm's goodwill, which is 1,75,000 rupees, multiplied by T share in profits, which is 2 divided by 10, which is rupees 35,000, and this needs to be divided among the gaining partners R and S in that gaining ratio. There is nothing specified, so the gaining ratio is equal to the old ratio between them, which is 5:3. So for R capital, we need to take 35,000 rupees multiplied by 5 divided by 8. So it's 4,375 multiplied by 5. So our capital account needs to be debited with 21,875 rupees, and SS capital account needs to be debited with 4,375 into 3, which is equal to 13,125. So let's post this by R's capital account. It was 21,875, and by S's capital account, we had to debit S with 13,125. Next, we'll go to point B. The assets and liabilities have been revalued. Working note 2. Revaluation, gain or loss. We can just do the add less approach to get the gain or loss on revaluation, because we are not asked to prepare it as part of the answer. The first machinery has to be valued at rupees 1,40,000. Book value is 1,50,000. So under less we'll write 10,000. Next, patents to be valued at 40,000. Book value is 30,000. So under add I will write 10,000. Finally, leasehold to be valued at 1,25,000 against 1 lakh book value. So it's 25,000 under add. So 35,000 is the total of the adds and 10,000 is the total of the less. So there's a gain of rupees 25,000. So let's transfer the gain, T share of gain, to T's capital account by revaluation account. $25,000 multiplied by T share in profits, which is 2 by 10, comes up to rupees 5,000. Next, let's go to point C. We need to calculate T share in profits. Working note 3, amount of T share in profits up to date of death. As per point C, the profits in 2018-19 should be taken to have accrued on the same scale as in 2017-18. So that amount is rupees 75,000 multiplied by number of months lived by partner T, which is 4 months from 1st April to 1st August, and multiplied by his share in profits, which is 2 by 10. Comes up to rupees 5,000. So we'll insert that by profit and loss suspense for the profits is 5,000 rupees. The entries are done. We will total up T's capital account and transfer the balancing figure to T's executor's account. To T's executor's account, balancing figure 1,21,000 rupees. Next, let's go ahead and prepare T's executor's account. T's executor's account. Left side debit, right side credit. Particulars rupees, particulars rupees. So the amount which is transferred from T's capital account to T's executor's account is rupees 1,21,000. We are paying the executor rupees 21,000 immediately. So to bank account 21,000 rupees, and the balance will be transferred to T's executor's loan account. So the amount transferred to the executor's loan account is rupees 1 lakh. The question does not ask us to prepare the loan account, so we'll skip that. I'll remove the split. We can view the entire answer together. So we began with T's capital account. And then prepared T's executor's account. The first working note was goodwill. Second working note was for revaluation gain or loss. And final working note was T share in profits up to date of death.